2020 to the Independent Women's Forum. Hadley Heath Manning, we got market watcher Scott Chelledy and Fox Business Network's own Susan Lee from the NYSE. No surprise, Susan, that they pour money hand over fist with this, but the numbers, especially those, earmarked from the financial community and disproportionately for Democrats, stand out,
That is very interesting, I have to say, because when you're here at the New York Stock Exchange, I would say it's mostly Republican. A lot of the screens are mostly on Fox News, Fox Business, and they are pro-growth. They want pro-growth policies stemming from the Republican Party, usually deficit spending, tax cuts, and also, we also have deregulation as well. So that's interesting, and you're right. I mean, the individual donations, it seems to favor the Democrats with $1.3 billion over $1 billion for the Republicans.
Scott, from your vantage point, money doesn't necessarily give you an edge. Hillary Clinton had a decided edge when it came to fundraising and just money spent during the last campaign, and we know what happened there. So when you hear this sort of thing and that Democrats have been spending more of it and raising more of it, what do you think?
Well, it does. It has a little bit of an influence, and here's what it's done. Say, even in the state of Illinois, I mean, we're now spending as much for state elections, state representatives, that we used to spend 10 years ago on gubernatorial candidates. And it doesn't seem to be very difficult to attract the big-time DNC money or big-time state donors, because you're not going to believe this, Neil, but we've got three candidates here. One, a congressional candidate, and the other two are state reps that are now getting money while they are living at home with their parents, okay? So they're running for office, living at home with their parents, and they are attracting DNC and huge money from in-state Democrats. So it doesn't seem to me that you have to have a resume to even get any of it.
Well, is this a great country or what? But Hadley, I'm looking at this and wondering what you look at. I've been talking to a lot of smart people about how they're going to sort of play out tomorrow night. And much is said when Indiana comes rolling in, what kind of a margin, for example, are we seeing in close races and obviously in the Senate race, and whether Joe Donnelly, wins by a little or a lot or wins at all. What do you watch as the results start coming in?
Well, first, a comment on the money. There wouldn't be so much money in politics if there wasn't so much for sale. And that's a problem on both sides of the aisle. It's been an increasing problem. I will say this year, a couple of trends that have boosted the numbers in terms of donations. People are riled up. They're polarized. It's mostly a turnout game, I'm afraid. So I'll be watching turnout tomorrow night to see, exactly how many people on either side of the aisle showed up, because, of course, elections go to whoever shows up. But now that campaigns have access to even more expensive big data and data analytics tools, that's where a lot of this money in politics is going. They're building complicated voter profiles to try to really pinpoint who's on their team. And that's a sad trend. Unfortunately, it means that a lot of independent and swing voters are more or less disengaged, maybe saturated and overwhelmed by, how much advertising they're getting this cycle. But it's only going to get worse in 2020.
Yeah, it tends to just get clutter. But Susan, there is a thought here that there's a consensus view of how things could turn out tomorrow, and the consensus seems to go something like this. The House goes Democrat, the Senate goes Republican. Wall Street likes that. The people you talk to, is that their view, and they would be surprised, maybe pleasantly surprised, because that's generally a conservative, capitalist-loving crowd.
Right.
They like making money, and they feel they've made a lot with Donald Trump. So would they, if it were not to go that, and let's say that the House were to stay Republican, what are they telling you?
Well, that would be a shock to many here. A capitalist mindset, they would probably be applauding that. A few days after the election in 2016, that's when the buying and the money started rotating in, because when you control both houses, that's when things get done. Having said that, I think people are preparing for gridlock. Yes, it's going to be a split government in many people's eyes, and that's something that they've dealt with for so long. It's status quo, and they just move on from it.
Scott, I was looking at some of the market statistics on this. In a split government or after elections where the incumbent party in the White House lost seats, whether it's Ronald Reagan in 1982 or in 1994 after Bill Clinton lost 52 seats to the Republicans, and they seized the House after 4 decades out of power. Stocks were up in both cases 6 months later, a year later. So would that be, whatever your bias is, would that be a welcome development?
Well, maybe not welcome if you're a Republican, but welcome if you like the markets. Yeah, I think at the end of the day, the only outcome that would probably be slightly negative is if the Democrats win both, right? And I don't think that's going to be the case. But even if it is, we could see us tail off a little bit. But I still don't think that matters in the big picture as long as this economy still keeps giving us the numbers that we got on Friday. So as long as we're 3 yards in a cloud of dust and everything still looks good for the economy, I'm not too concerned about it. And remember, the incumbent party isn't really very well favored in this election. And like you just mentioned, 1994, Clinton campaigned his socks off and they got killed. So I'm not too worried about it.
And we should point out, Hadley, that people forget, I mean, even though it's largely seen as a conservative, money-loving crowd, I mean, they did very well with Bill Clinton, like Bill Clinton. So they make money where they can and enjoy it when they can. So let me get your sense, Hadley, of just the mood there and the economy, because many Republicans have faulted the president for not crowing about his one crowning achievement, by extension, the Republican Party's achievement, this booming economy, these record low unemployment levels among so many key demographic groups, from Hispanics to African Americans or women, you name it, and that's what he should be crowing about. The president is more or less saying, yeah, I do mention that and all, but these other issues will bring out, he's not saying that, but it's clearly inferred, of the base. What do you think?
That's right. I mean, if you look at what voters are reporting in terms of their top issues, it's not always the economy. In fact, a lot of polls show health care being the number one issue in this election. And that's something that Democrats have been pushing. Republicans need to really beef up their response and learn how to talk about, what they would do and how they would lead on that issue, an issue where they've talked a lot about repealing, replacing, or seriously reforming the Affordable Care Act, and so far have failed to do so. But when it comes to the economy, I think the focus has too often been on Wall Street, when the president and his allies should be focusing also on Main Street. We look at consumer confidence levels and wages and benefits doing better than they have in years. That's something that benefits the everyday working man and woman and their families here in the United States. It's not just about how the stock market's doing, but it's about how strong our labor markets are.
No, I agree.
And what that means
but
for
usually they are kind of joined at the hip. If one's doing well, the other presumably is doing well. Not all the time, but a good deal of the time. Susan, is it your sense, or the people you talk to right now, that this is going to continue, regardless of how the election goes tomorrow? Obviously, to Scott's point, the wind at all these guys back is the strong economy, these record low unemployment levels, retail sales picking up, not across the board, but among many, and what will likely be a very strong holiday shopping season. What do you think?
Yeah, I think that's the expectation. So there's virtually no volume at play today, and probably for tomorrow to see how the midterms turn out. But there's still a lot of investor dollars swirling around, and there are a lot of fundamental wins right now for the stock market. So they feel confident, but let's get through this and see what happens tomorrow night.
Do you still like the market where it is now, Scott? I mean, it's been through some crazy days, weeks here, but a lot of people are saying, well, we're 900 points or so off the lows we were looking at a week and a half ago. Maybe cooler, calmer heads prevailing. What do you think?
Maybe in the short term, and ultimately, I'm a normalization guy. I'd like to see interest rates get to a fair level, a real level. But you just can't normalize one part of the equation.
What would be a real level?
I think a little bit higher than we are now, 3.5, 3 3/4. But it can't go there too quickly. The market doesn't like surprises. But at the end of the day, you can't normalize just one part of the equation and not normalize volatility. Remember, we used to also be a lot more volatile before QE, when QE kind of took all the volatility out of it, and we managed to interest rates down to zero. So if you're going to normalize, we got to normalize everything. We can't just pick our spots.
I do find a little rich, you of all people, talking about normalizing anything, young man. I kid, with great love and great respect. Thank you all very, very much. And obviously,